Hello and welcome to another edition of Stockwatch. So we see that the earnings season just keep on giving for a lot of the big players in the market, and Twitter are no exception, as their earnings reports have seen record revenues for the last quarter of 2020, capping off what the chief executive has said as to be an extraordinary year for the platform. So the social messaging giant said the revenue grew by 28%, which was just shy of $1.3 billion compared to 2019. However, there were calls for concern in January after they banned the ex-president Donald Trump from the platform, which analysts said could have affected Q1 earnings for this year. So the removal of the avid Twitter user has prompted fears that it could affect the platform's popularity in the current quarter. However, their chief executive has said that users are able to follow more than 6,000 different topics, and he went into explaining diversity in topic growth and added that 80% of Twitter's audience is actually outside the US, and they have a global service, so they're not just dependent on news and politics in general. So obviously Donald Trump being kicked off Twitter when he was president could have been a detrimental downturn for Twitter. We'll obviously find that out later on in the year when the next earnings season is established and reported. But for now, the chief executive is saying that, this is not really going to affect profits or stock prices that much. So the long-term outlook for the company, Twitter, have stated that its total cost and expenses would rise over 25% this year as they plan to employ more people. So the headcount is going to get a lot higher, over 20%. It ended 2020 with more than 5.5 thousand employees. So, sticking with social media, we've got Facebook as well, that it's being sued for losing control of data of about 1 million users in the UK. However, Facebook still remains a buy stock for investors as their growth revenue was 12% last year and net income also boosted by 40%. So Facebook is still looking bid, and it's looking great for the near term at least. So, social media, it's always been a good buy stock for the last few months, and obviously as we get off the back of the first wave of the pandemic, it's actually grown even further. So the last time I looked at Twitter, I saw the peaks and troughs that I was using. I wasn't really putting any Fibonacci indicators or in the Ichimoku clouds neither. I was just looking to see if we're going to see some price exhaustion. We've seen a little bit, before this boost on momentum, we saw a slight hidden divergence that was probably going to move prices lower, but since the recent buoyant news, we've seen Twitter jump to fresh record highs. So I'll be looking at any kind of reversal if we see momentum waning, and then obviously these points are the points of interest. So the low end of $56, and then we've got the high end of $52, and then going down to 50. So if we see prices start losing a bit of traction, I'll be looking to see excuse me, I'll be looking to see if I'll be putting any sell positions as we approach these areas of interest for the near term at least. So this is probably looking into the the rest of February at least, and probably going into the back end of Q1. So just something to look for with Twitter. After every inspiring growth, we always see a bit of a downturn, as we've seen here and here as well. So as you can see, it's a bit of a hummingbird effect at the moment. So I'm waiting for the next come down, which here and here is vastly identified as well. So just something to look out for in the next few trading sessions. Facebook, on the other hand, I'm just seeing, the last time I looked at it, we broke out of this ascending channel. I'll just extend that a little bit further. We started consolidating. We bumped down to the recent low, which was in September of 2020. And now we've seen some choppy action. So I'll just be waiting to see if prices start breaking this $267 region to move back down to another attempt at the fresh low that we found, not so long ago, last month. So these are just little factors that I'll be looking at in the next few trading sessions. A little bit like Twitter, when we see a little bit of exhaustion coming. I'm not seeing too many divergences on the momentum indicator to give me a cause for concern to the downside. I'll just be looking to see if it starts moving away from this significant psychological area of the $267. So just something to look out for in the next few trading sessions. That's all from Stockwatch today. Thank you very much for joining me. If you have any comments or queries, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.